Our trading floor in New York. Doron, great to always be able to catch up with you and get your perspective. And just so our viewers know, you've been covering these institutional clients for many years, long onlys, hedge funds, etc. What are you seeing? What's really going on?
Catherine, great to be back with you. A lot has really shifted in the last, I'd say, 10 days. If you go back to looking at performance in the third quarter, hedge funds really got hurt significantly. And then if you look at the deal calendar to the IPO market, that was the first warning sign. We entered in October, and the performance of those deals really started getting hurt. So if you think about $4 billion of IPO paper, the highest number in the last 4 years, that was a warning sign in terms of the type of assets, and then people needing to sell some of those gainers that started reversing. And then if you look at October 3rd, where the bond market and the 10-year, as you mentioned, that really was a warning sign. It kind of got people to pay attention. What's going on? Yields are moving. And then you look at Thursday and Friday following the 3rd, we started getting data that showed that the quant funds needed to take down their equity exposure. So that really started the motion in putting things in motion, and people really taking a look at valuations, what was going to happen next.
A lot of great information there, Doron. Why did the quant funds need to take down their exposure?
Look, so they're risk beta adjusted, and they have different types of algorithms and different formulas that they've got in place. And when there are some warning signs, they've got to take down exposure when they see that interest rates are shifting and they are heavily skewed into equities. So when they adjust that, people see that flow. And remember, we've talked about the flow dynamics, and the quant funds really have a much bigger foothold in the marketplace. So what you had on the half day on Columbus Day, you had a half day in the marketplace with the bond market closed. The long short equity community took down their exposures as well, and that carried into Tuesday. Right? So that really forced everyone to really look at valuations and say, okay, what's going on here? And everybody really focused on that 10-year and on that move that we were seeing.
So what's next, though, Doron? And maybe I'm jumping too far ahead, because we certainly got the CPI data today that almost gave a little bit of a floor to the market. Of course, the market now thinking that the Fed won't have to raise rates as fast, because we're actually seeing a slowdown in that CPI data. What happened to that idea only 4 hours ago?
I really think, like, on a macro level, your point is correct. But in the short-term level, the flows have changed. And that's what we're seeing in the institutional community. How are people behaving, and what are they doing? So yesterday's last hour of the day really told you what we're talking about. The hedge funds had stayed away. The mutual fund community is not adding right now. We're in a blackout kind of period. Buybacks are at a lower amount for corporates. They're adjusting their earnings expectations that are coming out, and everybody's kind of waiting for earnings to kick off. So yesterday, when you saw that violent move to the downside, that really made people scratch their heads. So when I spoke to institutions last night, people were really starting to get concerned for the first time. We started showing stability today, and everybody felt better about it. But in the end of the day, when you have a lot of uncertainty, and you get the kickoff of bank earnings tomorrow, which will tell you a lot about interest rates and what they're thinking, I think people are saying, why can't we just wait? And we should wait so that we can get this right. I do think we get a nice pop going into the end of the year, though.
So when you talk about the uncertainty that the long onlys and the mutual fund companies, hedge funds are concerned about, what are those uncertainties today, Doron? Because so many of those uncertainties with respect to trade tensions, and also, so interesting, the underperformance of essentially every market in the world other than the United States, that's also catching people's surprise or attention today. Why now? What are these uncertainties people are now concerned about?
Yeah, so, we've talked about it often about Chinese tariffs, and everybody keeps bringing that up. The rhetoric, the tweets, the messaging back and forth. Every day brings a new twist, which really makes it hard for people to make their decisions. Fundamentally, they might be right, but in the short term, it really puts you on your heels. And, if you look at, you've got earnings now, and you've got a window here before the midterm elections, and everyone's really going to figure out what's happening in the next 30 days. That's going to be what really drives the market going forward. On a macro level, midterm elections, Chinese tariffs are very, very critical, but you have interest rates and valuation adjustments, which is healthy for the market right now. That's what's happening real time, Catherine.
When you saw the market sell off yesterday, Doron, how was the market structure? Did it behave as you would want it to behave? Because, again, you've been on the trading desk for so many years now. Did you like how it behaved, and was there enough liquidity?
That's a great question. Actually, we've had pockets of, drops when we've had prior drawdowns, like in February. This was very orderly. There was was enough liquidity. There wasn't a panic out there. When the quant community in the last hour is forced to take down their exposures, as the market goes lower, they have to take some off. That is what exacerbated things. So I actually am very pleased about this drawdown in the sense that people are behaving really well. There's no panic, and people are very constructive. They feel this is good, this is healthy, and we have a lot to look forward to between earnings. We have the midterm elections, and of course the China overhang is a very big factor.
What do you think then in terms of the catalyst or the driver to that year-end pop? What's that going to be, and what area is going to lead? I think that's the other big question a lot of investors are looking at right now. Fine, the growth momentum stocks, they seem to be out of favor, but will they come back into favor, or are we actually going to see a real rotation into true value names?
Catherine, that's the best question. And the reality is people don't have enough value names in their portfolio. So it goes back to asset management and proper picking of stocks. It's active management versus passive. We talk about it all the time. You're going to have to be right. That's why people are going to be very, very careful before they jump into the market and just dive right in. So, you know, what's interesting is if you look at how defensive stocks have started acting, they're actually performing and acting defensive. Gold names, industrials, utilities, they're acting defensive. It's the first time in a long time. That's good. That's healthy. That's the market working itself through. But remember, when you have most funds that are flat to up small in the year, we're talking the mutual fund community, and then, of course, the hedge fund community on this pullback are going to have to make money and figure out how to do that. They're going to have to dive into their names, have their fundamentals, and there's going to be that one push. You have to imagine that that's going to happen either with the midterm election clarity or some kind of China deal.
Yeah, and what do you think, Doron, in terms of some of your conversations and being in the market for so long, what do you think might be the driver? What sector?
I definitely think that people are going to look at technology again. It's gotten very, very cheap on a relative basis, and they just don't want to jump too soon. But like we've seen some active buyers of the growthy names again today on this drop-off, and that's encouraging. That's the mutual fund community getting very active and a bunch of those names again, and that's good. But they're being very, very careful. They're not jumping all in, making one big bet. They're incrementally adding to their positions. I also think consumer stocks have just gotten destroyed. So remember, as we get into year end, people don't want to hold the losers, but they're going to pick the winners in those sectors.
Yeah.
And I do think the banks are going to really tell us a lot, Catherine, starting tomorrow.
Okay, we'll watch for that. And Doron, as always, thank you so much for your insight. Thank you.
Great. Thanks for having me.
Talk to you.